let's talk about how to double your gains in the stock market. How are you guys doing today? My name is Apple, and today we are filling in the financial gap between schools and the real world. And today the topic of our video is talking about investing on margin. So this is an investing technique that you might not have heard of if you're a beginning investor, if you are just getting started in the investing sphere of things, but it is very important to be able to understand and potentially utilize investing on margin as an investing strategy. And it is the way for you to potentially double the return on your investment. So I think it's very important that we talk about this now so that you understand what it is. And what we're going to cover in this video is just what investing on margin is, what the pros and cons of investing on margin are, and if you're into it, if the pros outweigh the cons for you, then how you can actually go ahead and get started with investing on margin for yourself. So that is really the topic of our video today, guys. And before we hop in, make sure you leave a like, subscribe to the channel, and do share this video with a friend so that they can learn about investing on margin as an investing strategy. So without further ado, let's hop right in and talk about what is margin. So to invest on margin, you're going to need to open a margin account. Now, this is separate from a brokerage account, which is what you use to invest in stocks with. So you can open a brokerage account through your online broker. You can open a brokerage account through like Fidelity Investments, through Robinhood, through Vanguard, Charles Schwab. All of these guys will offer you brokerage accounts, and in addition, they will offer you margin accounts. So in a margin account, what you can actually do is you can purchase shares of stocks, purchase bonds, purchase ETFs on a loan. So you can take out a loan to purchase additional shares of these equities, of these investments. You can actually buy them on a loan, which is called investing on margin. So when you hear investing on margin, that means investing on credit. So you're taking out a loan in order to invest more money into the investments that you are making. So essentially how I like to think about this is it's sort of like taking out a mortgage on your stocks. So what you do is you take out a loan to buy more stocks, or how you would take out a loan to buy more house with a mortgage because you can't afford that whole cost of the house. You just put down a down payment and take out a mortgage. Sort of like that, but with stocks. So you're taking out this loan, which you're going to have to pay interest on. And because you have to pay interest on this loan, it's sort of in your best interest to hold these positions for as short amount of time as possible. So when it comes to investing on margin, your best bet for the most part is to invest in the short term. So if you think a stock is going to go up very rapidly in, say, the next week or so, and you're very confident in this, you could potentially invest on margin in order to capitalize on this gain to a greater extent than what you could do with just the money that you have. However, I am not a certified financial planner. I am not certified in any way, just to do it on a YouTube channel, trying to educate you guys on investing on margin. So anything I say in this video is not advice. It is just information for you to make your own decisions with and for you to operate in a more educated way on your finances. Just want to put that out there so that you don't take anything I say legally, because it is not. So again, investing on margin, it's taking out a loan, it's taking out credit to buy more investments, which you in turn have to pay interest on because this is money that you're borrowing. The person that is lending you the money is going to want interest on their loan to you in order to make it worth their while. So this gives you more leverage when you're purchasing investments, because instead of being able to, say you have $100 and you want to invest in the stock market, well, if you don't invest on margin, all you have is $100 to invest. However, if you invest on margin, you can potentially leverage up to, say, $125, $150, maybe even $200 in an investment, as opposed to just that original $100. So with most margin accounts, what you're going to actually need is you're going to need about $2,000 in that account in order to start it, because they want to know that you have these funds so that if your investments do go south, you actually have the money to be able to pay them back, because that is their main concern as they're lending you money to invest in things that do fluctuate pretty dramatically in value. They want to know that you do have the cash to back up your investments if they do go south. So you're going to need, for most margin accounts, if you stick around to the end, I'll show you a way to sort of get around this. But for most margin accounts, you are going to need at least $2,000 in there in order to have it get going. And most margin accounts additionally are going to limit you at a 2 times maximum or 50% leverage. So if, like I said, if you have $100 to invest, they're only going to allow you to invest $200 total. So you can invest your 100 and 100 of their money, but they're not going to let you go above that for the most part. There are some things that I have heard of that would allow you to leverage up to maybe 3 times, but those are very, very risky. I would not recommend those at all, and I'm definitely not recommending margin in this video. I'm just trying to educate you guys on what investing on margin actually looks like. So you can leverage up to 2 times your money. So again, with that $100 investment, you could leverage another $100 and get that up to $200 total invested in the stock market. So say you wanted to buy Microsoft, you had $100. Microsoft's trading about $100 right now. You could buy 1 share of Microsoft. If you didn't invest on margin, if you invested on margin, you could buy 2 shares of Microsoft. So that is basically how investing on margin works and what it is. All right, so now what we're gonna do is we're gonna hop into the pros and the cons of investing on margin. All right, so the pros and the cons of investing on margin, let us get into that right now. So we're gonna have our pros. Fantastic. All right, so the first pro of investing on margin is that you are able to potentially double your gains. So if your investment originally went up 10%, so say you had $100, and you invested that in a stock that went up 10%. You're now at $110 and you made a $10 profit, okay? So you made a $10 profit off of that 10% increase. However, if you go out and you invest on margin, then you're able to invest $200. And if it goes up 10%, you're gonna have $220. But then you subtract out your 100 that you invested your own money, 100 of the bank's money, and you are left with $20. So you made a $20 profit in this case because you were able to leverage an additional $100 and further capitalized on that 10% increase. So you made a 20% gain here as opposed to 10% without margin. So that is sort of how the doubling your gains works. Next is you can make more trades. So more trades and more trading opportunities is what I mean here. So more trades, so essentially because you can leverage double that money, you can invest in twice as many different opportunities. So say you didn't have enough capital to invest, you saw potential in say 3 different companies, you only had enough capital to invest in 2 of them. If you had margin, you could leverage this money and potentially capitalize on all 3 of these investment opportunities instead of being limited to just the 2 that you have the actual funds for immediately. So that is another way that margin can be beneficial. It can let you capitalize on more investment opportunities that you originally did not have the capital for. And lastly, it allows you to have further diversification in your portfolio. So diversification is something that is very, very important when it comes to investing. You want to make sure that you don't have all of your eggs in one basket, because if you do and that basket goes south, then your entire portfolio can go south, and that is no good. So with investing on margin, like I said before, you can capitalize on more opportunities in more different sectors in order to diversify your investments. You could potentially invest in more different kinds of equities as opposed to just stocks. You could buy some bonds as well if you had more investing resources and you weren't just limited by your individual capital. So those are my 3 top pros that I see in investing on margin. The fact that you can potentially double your gains, you can potentially make more trades, and you can potentially further diversify your portfolio because you have this additional leverage as opposed to just your original capital like we saw in this example. But let us move on to the cons, because it is not a perfect world investing on margin. In fact, there are some very significant cons that you should really be aware of. And this is going to be a very, very important thing that you know what the cons are when it comes to investing on margin. So the first one, and the biggest one, in my opinion, is that you can double your losses. And potentially even more than double your losses. You can potentially have infinite losses when it comes to investing on margin, because as that interest rises, as you have to pay more and more in interest every single month, every single period, and your stock price is decreasing, you can potentially pay infinite amount of money to the person who's lending you money if you never do end up selling, and this can just be a road to getting in tons and tons of debt. So investing on margin is very, very dangerous. And let's go back to that original $100 example. So say you had a $100 investment again, and this time it dropped 10%. So it dropped down to $90. So originally you would have taken a $10 loss, 10% loss, but if you were invested on margin and you had that $200 in, drops to $180. If you sell it right away before you have to pay any interest, you're already down $20 on your original investment, so you're now left with $80, and here you're left with $90. So you lost an additional $10 by investing on margin, because how margin works is you have to pay back the person who lent you the money before you get the money yourself, because obviously they lent you the money, they're going to be expecting that you pay them back before you get paid. So if your investment, say your investment drops to $50, so if your investment drops to $50, you would be left with $50. If you were invested normally, if you were invested not on a margin, not leveraged at all. However, if you invested on margin and your stock dropped 50% or down to $50, you are left with $0 because your investment is now worth $100, but you have to pay that full $100 back to your lender. We're not even thinking about interest here, but you have to pay that whole $100 back to your lender, and you are left with nothing, potentially even negative if you have to pay them back with interest, which you do. So that is a very, very dangerous thing of investing on margin, is that you can lose a lot of money very quickly if you don't know what you're doing. And even if you do know what you're doing, it's very easy to lose a lot of money very quickly investing on margin. So that is something to be very, very aware of. Next con, also very significant, is margin calls. So when talking about margin, it is very important to be aware of margin calls. And essentially what a margin call is, it is when the person who is lending you money comes and knocks at your front door and says, hey, your stock prices have dropped pretty significantly, at least in our eyes, over the last X amount of months, weeks, days, whatever. So they see that the stock price has dropped and they get worried. They get worried that they're not going to be able to get paid back. So they say, you either need to A, put more money into this account so that we can be sure we're getting paid back at some point, or B, sell some of your stocks at this lower level and get us paid back so that we are not worried that you are not going to be able to pay us back. So margin calls are very, very detrimental to your investing strategy because they force you to sell low. You want to buy low and sell high. Margin calls force you to sell low because your lender gets worried when they see the stock price low and they say, all right, you got to sell now or you got to put more money in now. And that forces you to make a tough decision because you either have to cut your losses at a lower level and take a huge loss, or you have to pump more money in to a potentially failing investment and even get further into debt. So that is a very, very significant thing with investing on margin, is margin calls, and you want to be very, very aware of these if investing on margin is something that you do decide to do. All right, and next con when it comes to investing on margin is the interest that you're paying. So we were not even factoring this in our previous examples, but you do have to pay interest on the money that you borrow in a margin account. And these interest rates are not fixed. So you could start off by borrowing at, say, a 7% rate, but then your lender could instead decide to raise that rate to like 9%, and you just have to work with that. They don't have to come to you and ask you for permission to do this. This is just something they are free to do. So you have to count on that. You have to count on them being able to potentially rise the rate of interest on your investment significantly, and you have to factor that in to any potential investments that you're making so that you know that you can still be making a profit even if they do decide to raise the interest rates on that money that they're lending you. So the interest rates are not fixed and they can definitely change those around at any point. So that is not something that you can count on. And lastly, investing on margin is just a lot more stressful and requires a lot more attention. So I say it's stressful because you have to pay a lot of attention when you're investing on margin, because you are working with not just your own money, you're working with other people's money. And if you lose other people's money, that is a lot worse than just losing your own money. Like, I can go out and lose all of my money and that's just on me. But if I go out and lose a ton of somebody else's money, that is much, much worse, because that person is going to be coming after me and they're going to be saying, I need my money back and I don't have that money. So it's a lot more stressful working with other people's money because it's not just your own skin that's on the line. It is tons of other people who are trusting you to make good investments and make good choices when you're investing on margin. So that is something that causes additional stress, and you have to be a lot more attentive to your investments when you are investing on margin. So now let's just talk about how to do it. How are you going to set up your margin account? Well, you've really got two options here. You can either choose to invest through your retirement brokerage, or you can choose to invest through Robinhood. So these are the two places that I would recommend to you to get started investing in margin if that is something that you're interested in, if that is something that you think you are at a level that you're ready for, because it is something that is not for beginning investors. It's definitely for experienced investors who have been in the game for a long time and know what is going on, not for people who are just speculating and think they can make a quick buck by investing on margin. So let's just cover both these options really quick. Your retirement brokerage, so wherever you have your IRA, your Roth IRA, whatever, chances are they do have margin accounts that you could open up. And yeah, I would just recommend that because you already have a relationship going with these guys. So starting another account would be a lot easier than going to somebody else. But definitely do your homework and figure out where the best place is for you to fit your goals with your margin investing if that is something that you're interested in. And secondly is Robinhood. So Robinhood does offer investing on margin if that is something that you are interested in. It does require a subscription to their Gold service, which is a monthly fee. It's only a couple dollars, but it is a monthly fee that you have to pay. So that is something to consider. But so, I mean, with both of these, you just got to be aware of the numbers. You got to be aware of the fees that you're going to have to be paying. You're going to have to be aware of your minimum account balances, and you're going to have to be aware of what that interest rate is on that money that you are borrowing to up your investments. Because if that is a significant interest rate, which it probably is, then it's going to make it a lot tougher for you to make a profit with this if that interest rate is cutting into your profits significantly. So know your numbers, and secondly, know that you may have to sell at an inopportune moment. Know that a margin call could happen at any point, and your lender could say, hey, we want our money. We want to know that you're good for it. So you either got to put more money in, or you got to start selling stuff at a lower price. So you either got to put more money in, or you got to start selling stuff at a lower price. And that is not a situation that you want to be in, but you have to be aware that that is something that could definitely happen. And you got to factor that in to all of your decisions that you're making when investing on margin. And I'm just going to repeat this again. This is only a strategy for experienced investors. If you're a newer investor, definitely stick to investing your own money, and that way you're only losing your own money. You're not losing anybody else's money, because that is a lot more dangerous to be losing other people's money than just losing your own money. And lastly, I'm just going to say I personally do not invest on margin. I have never invested on margin. It's not something that I'm very interested in, because as a long-term value investor, I'm more focused on the fundamentals of a company and how they're going to perform over the long term, over 5, 10, 20, 30 years, as opposed to just the short-term swings of a company that margin can be used to capitalize on. So I'm more interested in the long-term view, and for me, investing on margin would not make any sense because those interest rates would be ridiculous over the long term, and it just would not make any sense for my current investing strategy. And I'm all about long-term value investing, just holding these companies for the foreseeable future and just using them as a nice way to either generate some dividend income or to just secure a nice nest egg for my retirement or for any upcoming goals that I may have in my life. So that's me shouting out long-term value investing right there. But yeah, so this video is just about investing on margin, how to do it, why you might want to, the pros and cons, all of that good stuff. So if you did enjoy this video, do leave a like, leave a comment below with what you think about margin investing, if that is something you have experience with, if it's something you're thinking about getting into, for sure let me know. And be sure to share this video with a friend so they can learn about margin investing. It's not a topic that a lot of young people know about, so I figure why not share the information with the people, because that is what we're all about on this channel here, is educating you guys on financial topics that are not taught in school and that are things that you are expected to know in the real world in order to boost your income, boost your wealth, and eventually achieve that financial freedom that people are searching for. So I will see you guys tomorrow, and until next time.